helping business owners to grow their profits and grow their businesses, achieve their goals, as both an advisor and an accountant for more than 20 years. And he handles issues like tax planning, incorporation, income splitting, succession planning, business management, and purchase and sale of businesses, as well as estate planning. So before we get started, I'm going to ask him to say a few words about MNP so you have a sense of the firm's capabilities.
Thank you, Camille. So I don't know if you guys know about MNP, but we're the 5th largest accounting firm in Canada, and we're also the 2nd largest here in BC. And we're about 110 people strong here in the Kelowna office. And we look at it, we're an entrepreneurial firm, so we know what the challenges that you face as entrepreneurs. And we like to work with you right from cradle to grave, I call it, from startup to exit.
Startups often fail to appropriately track the fundamentals of their business, and they simply track outgoing expenses, incoming revenues.
Yeah.
Can you tell us why this can become a problem?
Well, I call it back and looking at cash in and cash out isn't income and expenses and isn't your bottom line. A lot of people think that money comes into the bank, that's income, money goes out, it's an expense, right? So there's always a future benefit for a potential expense, right? It might be short term, and so expenditures might also have a long-term balance. So if you bought a computer or a piece of equipment that's $5,000, you're not going to expense that right away. You want to amortize that and depreciate it both for accounting and tax purposes. So that's why income into your bank account and expenses out of your bank account isn't the same as net income.
Can you delve into that a little bit further in regards to tracking legally and also financially around obtaining tax credits and other grant funding?
Okay, so what happens when you're doing your tax credits for like SHRED or IRAP and all that stuff, you're going to have some reporting requirements or qualification requirements. So if you're not tracking your expenses appropriately through a proper set of chart of accounts or a general ledger, chances are down the road you're going to get questions even from CRA too, as if they ever do an income tax or a GST audit and seeing if you've tracked your stuff importantly. So it's having those books and records starting from the beginning is critical to all businesses. And a lot of times people end up working so much in their business that they're not working on their business, and you can get sidetracked that way.
3 of our ventures, once they completed this program, attracted IRAP funding. So the venture does not have to be that far along to attract the funding. It's a really attractive program. So getting set up as a business and starting to track early on is valuable, even though it seems a little far down the road right now. When does it make sense? Vincent was speaking earlier about sole proprietorship.
Yeah.
When does it make sense to apply for a sole proprietorship versus a general partnership, or to actually become a corporation?
Okay, so for tax purposes, you really don't apply sort of essentially for a sole proprietorship. It actually reported on your business statement on a personal tax return. You had a question about GST is what I was understanding, yeah. So that small supplier threshold hits at $30,000. So at any point in time, once you hit that $30,000, you are required to register for GST. And then once you're registered, you're in the system. So it's not a 12-month rolling period. So once you're registered, you're registered. And you are required to collect and remit GST on revenue on that side. So that's the question on that. Sole proprietorship from a legal perspective, depending on the type of business and what you're doing from a liability, could be good or bad. The good part is from a tax perspective, you get the write-offs and you can deduct any losses against other income that you have. But the bad part is that you are the business, so you could get sued and they could come after you personally and all your assets. The next level is...
And also a co-founder or other parties that are engaged in the business.
Same with a partnership too, whereas a corporation is a separate legal entity that's separate from you as an individual, and you're incorporated under the BC Corporations Act. So that prevents that barrier from them coming after you, depending on your line of business. Again, it's also a tax decision and a legal decision. You got to weigh both aspects of it.
The structure will also impact your ability to get certain types of grant funds. So you'd need to be a corporation, for example, if you wanted my tax funds. there are several different grant funding bodies that require you to be a corporation, and some require you to be a corporation for a period of a year prior to applying.
Yeah, and there's like EBC tax credits and so forth, but it always comes out, you gotta weigh the cost and benefits and where you are at their stage, right? So it's basically monitoring all your expenses and what you're doing, and then talking to, like Drew said earlier, getting a good team of advisors and mentors earlier on so you know you're doing the right things.
Are there software packages you would recommend that a startup use to correctly begin tracking this kind of data?
In my world, what I've seen in public practice is that there's QuickBooks and there's Sage Accounting. Another new one that's come out is Xero. It's a platform. And they're good software packages. Again, it's always as good as the user that's using them. Some online programs I sort of shun away from because they create more mess than good depending on the user. Like QuickBooks has got an online version, and that could be good and could be bad.
Once you start to get a more sophisticated business, the
Yeah.
online version is too simplistic to really manage all the different aspects.
So for off-the-shelf stuff, QuickBooks, the desktop version, and also Sage, the desktop version. Sage is the former Simply Accounting, and Xero is another one. They're good accounting packages. Excel spreadsheets are good, but again, could be scary.
Excel spreadsheets and learning Excel is really valuable on the financial projection side.
It's a must.
It
Yeah.
really is, and being able to calculate formulas and pull data from one spreadsheet to another, create expenses and play them out over time, it saves you countless hours. So it's well worth taking an Excel course and beginning to learn. If you want to be an entrepreneur, it's a fundamental skill. Taxes.
Yep.
Once you set up, what kind of taxes need to be considered in addition to GST?
GST.
And when should they be paid?
Okay, so if you're a sole proprietorship, we'll start there. Your taxes are usually due April 30th, but you actually can file your tax return by June 15th. Same with a partnership. But the taxes are still due April 30th, so you have to have a good estimate of where you're sitting. So you might as well file them by April 30th is my suggestion, because otherwise people tend to procrastinate and go right to the deadline. That's income tax for sole proprietorship and partnerships. For a corporation, it's generally 3 months after the fiscal year end is when the taxes are due. That's income taxes. GST is due usually 30 days, 31 days after the period ending. If you're a monthly or a quarterly or annual filer, usually have 30 days after that quarter or period. Payroll taxes are always on the 15th of the following month, usually. And then you also have PST, depending on the type of business you're in. In BC, we have to deal with PST. And that's almost like an embedded cost too for the consumer, right? So you have to go. So those are some of the common taxes that you have to be concerned about.
QuickBooks in the US will, you can purchase the service where they track the payroll taxes and
Yep.
pay them for you.
Yep.
Is there a service like that in Canada?
Yep, there's ADP, Ceridian, or a couple of things I can off the top. Depending on how many employees you have, there's a CRA payroll online calculator that you can use. It doesn't store the data, but some of these programs like Sage and Simply have payroll modules within them that upload the proper tax rates and so forth.
And they'll guarantee that they're doing it
right.
appropriately so that you aren't liable if there's a
Yeah,
mistake.
so back to that comment, so when you are deducting deductions off of employees, as a director, you're basically a steward of those funds on behalf of that taxpayer and remitting it on their behalf to the government. So if there's mistakes and errors, you could be personally liable for that. Same with GST. You charge it to a customer and you've collected it on their behalf and supposed to send it to the government. If you're not doing it properly, they could come after you personally for that.
Some of the teams will be looking at purchasing equipment as part of their research and development process. Can you explain in high-level terms depreciation and how that works in more detail?
Okay. So like I talked about earlier, cash out is not an expense, right? So cash out, you bought a piece of equipment for $10,000, right? It's an asset that has future value to you and to the business and to a potential investor. They see your assets on your balance sheet and so forth. And so you want to depreciate that based on the useful life of that asset. So different assets have a different useful life. and value and so forth. Another asset is land, and typically in a lot of your business, you're going to buy that, but you don't really depreciate land. But any other assets like buildings, equipment, computers, tools, and all that stuff. And for accounting purposes, you can determine how you want to depreciate it because it's based on the useful life. But for tax purposes, you have a certain write-off depending on what class they belong in for certain tax purposes, class 1, 8, 10, and so forth. Automotive is another asset that you might buy depending on your business. Some assets under $500, are you going to track everything like that? Chances are no, so you don't need to capitalize everything, but depending on how meticulous your books are, right?
And once again, as one is looking at R&D tax credits, very helpful to have this structured correctly. As the teams move farther down the process of building a business, there are a number of terms they'll begin to hear, accounting terms that can be intimidating if you've never heard them before, and sometimes investors will throw them out and ask you why you aren't doing one thing versus another, or when you're going to do one thing versus another. So I thought it'd be helpful for Gary to explain briefly what a couple of them mean. One of them is gross margin versus net margin.
Okay. I look at it in a simple way. It cost you $1 to make a pen, and you sold it for $2. So your margin's $1, so you made 50% margin on that profit, right? So it's your revenue less your cost of goods sold. Like you said earlier, like what's it going to cost for the sutures and so forth in that product, and what you sell it for, that's the profit you're making on it. So that's what your gross margin is in a business. So monitoring that is critical depending on the line. I'll give an example. Like I work with an automotive business, parts dealer, right? And margin is important. So depending on what product it is, they're selling 2,000 different SKUs in their business, and they want to be able to track what margins they're doing and so forth, so they can adjust prices and so forth and make their bottom line, because that's your top line, which can help generate all the revenue to be able to pay for all your expenses, your operating expenses.
Just to sew some of this together, when I was in the composite materials business, some of the composite materials had a very low margin, but we could sell huge volumes.
Yep.
Others had an enormous margin and low labor cost, but very long sales cycles. And so one had to decide which businesses were worth being in and where to put the energy of the company. And sometimes a small margin product can be worthwhile if there's enough volume there. So that's where the accounting and the financial projections come together as you begin to plan.
We have, like on that, we have a tool we use, it's called Profit Driver, and we can do a price volume sensitivity. And like you talked about doing your customer discovery, which Drew alluded to as earlier, I call it the squeak factor. How far will your customer squeak before they notice a difference, right? And so I used a simple analogy with one of my clients who was an auto body shop, where I go, if you went back and changed your shop rate by 2%, how many of your customers would notice? And he goes, probably no one. So that's your price increase, right? So it's doing the same thing, but at a higher price by 2%. And we could be able to in real time determine what the bottom line impact would be. So it's the squeak factor, I call it.
Nice. Basic tax accounting versus management accounting, or cash basis accounting versus accrual accounting.
Okay. Cash basis is, I'll talk about it enough. If you want to interject, you can anytime. But cash is cash in and cash out, right? Accrual is more when the expense is incurred and when you're responsible for it, and when the income is earned, right? And when you're going to get it, right? So cash basis accounting is not a good indication of the financial viability of your business. It doesn't give people the best picture of what's happening. So you might have incurred an expense now, but not paid it for 6 months. But the value of that expense have already been used and so forth. So it's not when you pay for it, it's when it's incurred. So cash basis, I try to stay away from it. Like, I don't like it. For projections and so forth, it works sometimes good. But from a end of the year at a point in time, an accrual basis financial statement is very critical to give an investor or a banker a really good picture of what the business is doing. Because you could have a whole bunch of expenses and you've never paid for them for a year and a half, and they don't show up in your expense. You're making your balance sheet misrepresented.
GAAP accounting, and why do lenders and investors ask for it?
Okay, so for GAAP, it's spelled GAAP, not one A, but two A's in there, sorry. So that stands for Generally Accepted Accounting Principles. We now call it ASPE, Accounting Standards for Private Enterprises is what it's called for private. And also you got IFRS, International Financial Reporting Standards. So that's a consistent basis of which financial statements are presented, and it's renowned around the world as far as accepted principles about how you track receivables, payables, and so forth. And it gives lenders and investors a product and a financial statement that they can look at when they're comparing two different companies and looking at what they should invest in and so forth. If they're prepared properly in accordance with GAAP, they've got a consistent product list that they're using to make a decision on.
At one point in my career, I was working in a number of different countries, and early on when China was getting very involved in tech startups, they weren't using GAAP, and they wanted to attract American investment, but you couldn't really understand the financial statements or compare them to, this was in the telecommunications field, you couldn't compare them to companies in the US and determine if they were good investments, and they eventually had to evolve to the stage of using these principles in order to be able to compete internationally.
Just on a side note, US GAAP's different than Canadian GAAP, just to make it more complex. Yeah.
Last one, and then I'd like to take some questions. This is a great one to be thinking about at this early stage. What is a chart of accounts?
Chart of accounts, how can I put it simply? It's basically all your account descriptions, like your bank account, your asset accounts, so whatever is meaningful to your business. So you would sort of adhere that and make it applicable to your line of business and look at different expenses. You can get a lot of sample chart of accounts for different other entities, but that helps you track what your expenses are, what your revenue streams are, your assets and your liabilities. And accounts have descriptions both with a name and also a number is a good way to do those. And have both, sorry. And that's what a chart of accounts does, essentially.
If you think about filing things in Google Drive or in Dropbox and wanting to have nuanced enough file folder names so that when you go back to find something, you can actually find it. This is the benefit of a good chart of accounts. If you can really define all the different aspects of your business and begin to categorize that way, then it makes sense to you later when you go back and you say, well, why was that so expensive? Or did we get paid for that or not? Or have we got the second installment in on that revenue?
Yeah.
Why were our shipping expenses so high? If it's too broad or you're missing elements, you end up lumping stuff together and it's not a decision-making tool.
Like an income statement that has revenue and expenses out is not going to help you manage your business, right? And what Drew alluded to earlier with his financial projections, that could be a starting point to set up a chart of accounts, right? So you're going to be doing that in the early stages, so I can use that as a template for a chart of accounts.
That's good.